Welcome to A Scrap Life, a podcast solely focused on the hustlers, grinders, operators, and business owners who live and breathe the scrap metal industry every day. We are the original recyclers. No suits required, just guts and hard work. Here is your host, Brett Eckhart.
What's going on, everybody? Another exciting edition, at least exciting for us over here on our end. Bulls versus Bears. I got my man Chad with me to give us just a bunch of positive news, what to expect going into the October trade. I feel like I'm slowly getting him convinced over to the Bull side, but he may beg to differ. But anyways, that's just me pontificating where eventually I'm going to get him to go. I'm going to get him onto the Bull side. But for now, I feel like he's probably got a fairly legit Bear argument. So what's going on, Chad?
You know, Brett, it's been, arguably one day into the October trade, and I feel like it's Groundhog Day. Every dealer says the same thing. My flows are off. This has got to be the bottom.
Dude, like I said, man, this reminds me of 2014, 15, when it was just death by 1,000 cuts. It was just like, can we just get to the bottom right now so we can see it, live it, know it, and then move forward. But I do feel like this is kind of the way it goes. Chip, 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 just a bunch of freaking little knife cuts.
Yeah. I think I feel like the psychology has really changed over the last 30 days overall in the especially the stock market. So we can look at the Dow Jones Industrial Average. I mean, this stock, it almost looks we're too extended on the downside.
Today, man, you saw the bounce. Today is wild, right?
Yeah.
Whether that's a dead cat bounce or if there's real potential there, but it feels like it's one of those a break in the action, but the trend still feels down to me.
Yeah, well, I think I did listen to a podcast, all in talk. It's a couple, 4 or 5 billionaires that talk about, and they're all manage certain capital. And one made the comment that, hey, we're probably 3 to 5% down from, away from the bottom. And we've seen a double bottom. And then today we've seen some strength, right? So that indicates you might be right. But he also said, hey, this could be the lost decade though, because we might be close to the bottom, but in 2023, something's going to break. And whether that, because interest rates keep going higher, something breaks. And when that does, he feels firmly that the Fed will come in and save the day.
Well, it feels like, what's going to break right now, at least like just the outside guy looking in, and I'm no prognosticator, but what feels like is breaking right now is other countries' currencies, right?
Yeah.
And that in and of itself is, kind of worrisome. Is what are they going to do to protect their own economies and protect their currencies against the U.S. dollar, the reserve currency, and how long are they going to allow the Fed to push rates up at their expense? And I think that to me is what I'm trying to pay the most attention to is just what does that look like going in the future?
Well, he made a valid point talking about currencies. He talked about how the UK, in 6 days they got a new prime minister. They said, hey, we're going to do tax cutting and don't worry about your energy bills. We're going to cap them. We're going to save the day there too, right? Yeah. And so the pound went way down relative to the US dollar. And then the Fed stopped it. Their Fed came in and said, we're not going to let you do that. And so it's bouncing back now. So as crazy as it sounds, I do agree with this point that when things truly get worse, you'll see the Fed step in.
Oh, 100%. I feel like that's where they're trying to set themselves up to do. Like they're trying to get themselves in a position to be able to step in rate wise. And the only way you do that is you got to get the rates back up so you've got room to come back down, right?
Yeah.
So, which is kind of silly in and of itself versus just trying to, but shit, that's why they get paid to do what they do and I get paid to buy and sell scrap metal. I'll stay in my lane over here.
Well, let's talk about scrap. So one chart I wanted to share, and it's just the continue. It was interesting when I did all the charts this month. A lot of sideways charts, a lot of nothingness. But iron ore is down some, not a lot, 104, 105 to 98. So it just feels like which to me is like just a sign of China just still slow.
Struggling, yeah,
Yeah.
struggling to increase purchases or demand.
Yeah. And I mean, a question for you, when you think about the globally in the dollar and your scrap flows, I mean, how much does the global picture matter when you're not getting a lot of scrap in from your perspective?
You know, I think it matters, but it's not, it's not as big of a deal. I mean, when you pay attention to it, right? This is what way I've always looked at it. I pay attention to the currencies, I pay attention to whatever else, but at the end of the day, like I'm a I'm in my business. Like I am on the daily, like what's going on, what's the flow look like, because I'm the one selling the material as well. So I can only sell what I can buy, and regardless of what's going on globally, the material flowing locally is my biggest concern, right?
Yeah.
And by concern, I mean just adjusting um, capabilities and capacity accordingly to where I see this thing going. Luckily, over in our area, population wise, it's growing. We're in an area that has growth potential, which potentially means, more people, more scrap, yada yada.
Yep.
So I can kind of project that to a certain extent, but I'm just trying to see where do I need to position us, today according to maybe what looks like it's going to happen in the future, right? So I don't, and that's just a guess. So globally is not as much a concern as what does the scrap flow look like locally, and then trading that accordingly.
I always feel like that's the big argument between a lot of like national steel mill brokers and the guy on the ground in the scrapyard, right? He's like, I
Yeah,
understand things globally, but that doesn't mean a lot to me today yet, right? And
100%. Yeah, I
so
mean, it doesn't, not to me.
that's a question I have for you. So you came into September trade, you sold what you thought was going to come in, I'm sure. I mean, did more or less come in than you thought?
Um, Volume wise, about what we anticipated. Um, we feel comfortable, and I don't anticipate tons per se as much as I try and set contracts basically off just normal volume moves, knowing like what I think I can actually get processed and get sold, and
Okay.
then try and ramp the capacity, the transportation capacity accordingly, whether that's outside rail cars, whether that's inside rail cars, whether that's trucking capacity, inside trucking capacity, outside trucking capacity, and just try and keep up with it. I was telling somebody this last month. So this is like one of the first last couple months now where we can actually process most everything we buy that month and get it out the door. It hasn't been that way on the scrap trade for a while now, there for a while. So coming into say March, or so let's say even going back as early as like late January, February, March, as prices began ramping up, the volume started coming, right? So when that happens, you're trying to process as much as you can process. But just because if the volume goes up 30%, doesn't mean you can automatically turn on your trucking capacity,
Right.
turn on your rail car capacity, because everybody else is trying to do the same thing, right? So you actually end up carrying more tons than you had maybe anticipated. So I feel like the last few months is like a destocking, right?
Yeah.
Is not even an intentional like, hey, you weren't able to time the market or whatever the case may
Yeah.
be. It's more just destocking, trying to get yourself to where you can process and ship the tons you're buying, for the month. So once that destocking kind of gets through the system, I feel like that's when there's going to be the real optionality if it comes up where a person or a facility owner decides, okay, I'm going to sit on some tons now, right?
Yeah.
Once you kind of get through that and you get yourself into a position of, well, I can ship or I can sit, depending on what my transportation capacity looks like, and that's kind of the way I'm looking at it. The last few months there was some destocking going on. There's some speculation on maybe some items, but for me, um, I'm not too hard of a speculator on ferrous and non-ferrous materials if I can keep it moving in an environment like this, where cash is king.
Well, that's where I feel like this business is so hard, is when even when if you want to get out of your own way, it's really hard to do that on the transportation side. It's not like it's not like we can always call in more van trailers or flatbeds. Like it's got to be end dumps or gondola cars, both which are in tremendous short supply.
Yeah. And that's where it becomes, your relationships with the steel mills, your relationship with the shredder yards. Do they have excess capacity to bring material in as far as trucking capacity, logistics capacity, or are you relying on your own, or are you looking for outside carriers? I mean, it becomes even more of a relationship business at that point. When you have to rely on other outside carriers, whether that's the consumer of the material or just somebody that just owns a trucking company, like you better have your ducks in a row. Because as much as a trucking company loves to haul your material, they're also in a position you can't just turn them on and turn them off,
right?
Or else you kind of lose your spot in line, right?
Yep. Yeah, and that's what makes this, when you're trying to go to different consumers or different origins, it makes it really tough because you're establishing new lanes always.
Always, yeah.
So with the rail strike that potentially occurred and then didn't occur in September, did that change or affect your rail transportation at all?
Not really. I mean, we're not heavy users of rail. We have enough to just kind of level out our flows. But that's not a big concern. We run our own cars, so that helps our cause, versus sourcing, like say outside UP cars. So that kind of gives us the ability to move those cars when we want to, need to, just kind of like trucking capacity. But we haven't needed to move nearly the amount of tons the last couple of months as we have, let's say, in the summer, late spring, early summer of this year, where it's been just trying to get stuff out the door.
Yeah, but I feel like you're in a unique situation. I feel like the two guys, at least this year, that's going to have a big competitive edge is the guy that own their own trucks, right?
Yeah,
and have the capacity, because you can't really buy a whole bunch of trucks today, even if you wanted to. Even if you could, you couldn't buy a whole bunch of drivers, right?
Yeah, exactly.
Find the drivers. And then the second thing is, I think the other guy that's in a pretty good spot is the guy that's really close to the consumer. That, so.
No, I think those are two big inherent advantages. If you're location, right? If you're close to the consumer, less trucking capacity needed, because you can do more round trips in a day.
Yeah.
Great. But I was talking to somebody last week, and we were talking about trucking capacity and what is that? Why is the freight rate moving up and this and that? And he was asking my opinion on owning trucks versus using outside carriers. And I said, my advice has always been, if you have the ability, financial capacity, back end ability, own your own transportation, or at least as much of it as you can, because it just gives you that much more flexibility in the market, right? Ability to pound material in when the price is right, the ability to service your customer, from an intake side. Transportation is absolutely crucial just because it allows you to control your destiny a little bit more.
Yeah. That's when people ask me, like, what business are you in? I'm always like, well, I'm in the scrap metal business, but I'm really in the transportation business, because when you're moving something that's $100, $200, $500 a ton, prospectively to that transportation, it's a pretty big chunk.
Oh, 100%. Yeah. So how does transportation play into the bull case?
Well, I think, I would argue that's what I find odd is I feel like, and maybe you can tell maybe you might be an anomaly that you use so much inside trucking of your own, but it feels like the guys that use a lot of outside trucking, it's not like all of a sudden they have all this truck capacity available. Like everyone's saying, hey, volumes are down. Okay, I got it. But that means, to me, more gondolas and trucks should be available.
Yeah. And
it doesn't feel like that on the trucking side.
No, it's still a tight market, right? I mean, it's still a tight market on the transportation side, especially trucking. I mean, even in our situation, I mean, we have a handful of trucks sitting right now, and we just haven't ramped up the capacity on our own end just because we don't know what that's going to look like going into winter. And I don't want to have a bunch of guys sitting that I can't give them miles, I can't give them work, right? So we've chose, we've had some truck drivers leave and go to other companies, over the year. And instead of re-upping and filling that truck, because we're getting some really good applicants, we've had the conversation internally, like, let's just pump the brakes and see where this thing goes from a capacity standpoint. And I know we're not the only ones doing that. And, we have the tons potentially to move, but looking at backhaul scenarios, like all the cards at play, we've even kind of choked off our own internal capacity, at least available capacity, just trying to meter where the market's going.
Well, that's where I mean, if we look back, Jeff Bezos, Elon Musk, they were cutting warehouse supply, cutting employees, headcount 6 months ago. Yeah. And that was like a big shock to a lot of people. But these are the same guys that sold a big part of their stock, right? Amazon and Tesla stock, when they said they would never sell in last November. So it just feels like they're always 4 or 5 months ahead of everybody else. And today we're seeing Facebook and Snap and several of these big tech companies reducing headcount, or like you said, maybe not reducing headcount. They're just not going to refill the open positions that are naturally kind of going away.
It goes back down to confidence. And, as a small business operator, especially in this industry, like, your greatest advantage is your speed to make a decision and to do things, right? So if you're not taking advantage of your biggest advantage, which is your ability to slow it down, speed it up, take care of the customer, whatever that is, like an expedited pace, then I feel like you're basically it's like a guy that can run fast that only jogs, like, you got to use your advantages to help you out when markets are like this. And those guys that, the Teslas or the Amazons of the world, I mean, you're telling me Amazon can't take a look at what their purchase reports are, like what metrics they use for shipments out and purchases, and say the economy's slowing down, like, if anybody, they got to be a bellwether. They got to be a bellwether indicator of what's really going on out there.
Yeah, it just feels like, Amazon, Apple, Google, say who you will, their data is absolutely tremendous, and meanwhile, like, the own U.S. government is operating like 6 months in the rear. It's just the disconnect is just so unbelievable.
It is. It's crazy if you start to really think about it.
Yeah. All right. So I do got one very positive chart for you. You ready for this?
Hit me now. Just as long as you don't follow it up with any negative ones. Oh, look at that!
Oh, look at this! Look at that! That's $19, man. $19 a ton right there. Pig iron up $19 a ton, month over month.
So sometimes, we'll take it however we can get it.
Yeah, no, I think that is meaningful, because I think, like, the scrap that's going to continue to be generated, the bushlings of the world, the pig irons, I mean, the scrap substitutes market, that could continue to deteriorate the scrap market, even during slower volumes. But if those prices start turning around, then,
it's going to be interesting to see. I mean, have you run the numbers to see how many mills are down for maintenance this month, or how many people aren't even buying scrap? Because to me, when I start hearing that makes a guy start going, okay, here we go,
Yeah. Well, and if you look at the steel production capacity, which is, again, in rears, right? But it's like the beginning of the month, we're around 77%, 76%, and we're off like a half a percentage month over month. It's not a big change, but it just feels very regional. It feels like, you got one region, a lot of outages, and then the next region, it feels like they're actually going up a little bit. And then the next region right over, again, another outages. So, Groundhog's Day, just like last month, I think it's going to be a very regional trade. And for certain regions, I think certain grades are going to be, the liquidity could be tough.
And yeah, exactly. And I mean, talk about the bushling market over in the Midwest. I've been hearing people just bemoan that whole thing, saying it's just getting sloppy over there. It's just the spreads and what's going on with that seems, I mean, that's worthy of the conversation, I think.
Yeah, well, I think, right now, I think we've seen the busheling shredded inversion, we'll call it. We haven't seen this since 2016, and it wasn't this big. And so why would that happen? Well, what was in 16, the market sucked. So
yeah.
I just feel like you got a grade that's continuing to be produced. And then on the other side, you got another grade shredded that's not being produced because your flows are down because the pricing, it's an elastic grade, as we say, right? And so you have this inversion. So how long can this last? If you had told me this is going to last 60, 90 days, I would have said that'd be the end of it, right? But here we are, and we're still thinking, okay, maybe that relationship even gets worse. So I don't know, but this market feels very regional, and it feels like and I don't blame anybody that's a bushing producer. I would not want to be holding on to tons today.
Yeah. Well, and I feel like, especially in your neck of the woods, especially over there in the Midwest, where there's a lot of that material being generated. Over here on this side, where I'm at, it's not a material we see. It's not a grade we see a whole heck of a lot of. So it's not something I personally pay a lot of attention to, but I know that people listening to this podcast are in those markets. So that's why I always like to have you speak to it, because that market over there as well as anybody, and the bushing market just in general.
Well, I would ask you, so again, it's going to be a little bit on your price you buy it at, but I don't see anybody, even on the heavy metal or on the cut grade side, I don't see anybody being out there being like, at least I'm not hearing guys be like, you know what, this is the month I'm going to build the big pile and I want to get really, really long. I think because to get really, really long, you got to see a big upside. And I don't know if anybody's seeing that today.
Yeah, exactly. I mean, and that's the only thing is the only reason to get long is if you feel like the price is just too low. I think we're still in a market where the price is, it's like kissing your sister. Like, it's like, yeah, it is what it is. Like, it's not great, but it's not the worst you've ever. It's not like kissing your aunt, I guess. But the reality of it is, like, the only reason to get long is you don't have a market for your material, right? That even makes sense. So like, if you got mills that are like, we're good, we're not buying, instead of you trying to shop around and find a good home for it, you're like, fuck it, I'll just sit. I think that's one of the reasons. Or the price is just too low that you just aren't willing to take that number.
Well,
You feel like you can cash flow. You'd rather have metal on the ground versus cash in the bank. And as long as the feds are raising rates and people feel like, the dollar isn't just getting pounded, well, then there's no reason to get long commodities. And you can see that across the board, right? Whether it's steel, copper, any commodity. But if you start feeling pressure come back on the dollar and you start feeling that inflationary, like, well, what is is it having $1 in the bank if I can have, a ton of iron on the ground? All of a sudden there becomes that like arbitrage opportunity, right?
Well, I think generically speaking, I don't think anybody wants to get long when they can't, when their market becomes illiquid. It's not like a lot of people think, oh, this is the time to get long, right? Yeah. But at the same time, I think you're looking the right way and saying, look, if my next best home is a huge haircut, then of course, why chase a bad sale?
Yeah. So. Yep. Unless you just, what I do think though, I mean, and I have talked to some people lately, is there is enough nervousness in the market that whether it's a cash flow nervousness or like if this thing lasts 6 more months, people are really getting hurt, like on the price side.
Well, I think there's certain levels in the scrap metal business of how well guys did over the last 18 months or 2 years, right? I don't know if the small shred feed guy, if he really made all the money, right? Where I think the shredders did good. I think the mid-size scrapyard did good. I think the guys on the boots on the ground, the peddler, it's not like he's like, oh man, I don't know, I don't need to go to work for 6 months because I made so much money. So
yeah,
that's where I think the bottom tier, I think, is going to struggle the most in this down cycle.
Even your smaller yards that made big capital investments, like in equipment, that's who I look at, right? And say, okay, if you went and bought a shear, or you went and bought 2 shears, or you went and bought some equipment and you financed it, so you kept yourself some liquidity, and all of a sudden your volume gets cut in half along with the price.
Yeah.
All of a sudden those numbers, your pro forma projections of whatever you thought, this is going to sustain me through here. Those numbers look very different. And granted, it takes a sustained down run of a year or two before it gets real rough out there. But, I would anticipate if it stays shitty for a lot longer, the guy's gonna be able to pick off some decent used equipment again. So we'll see.
What a big change that we're talking about,
Man. That's the good thing about doing these, Chad, is we can look back and be like, man, look how good it was or how bad it was. We can come back to it and we can discuss, either side of it.
Yeah, that's why I brought up the Dow Jones right at the beginning, because I feel like the mindset of the average Joe the average Joe in the world today is just totally different than it was 6-8 months ago.
Yeah, 100%. I mean, isn't it amazing how 6-8 months? I was reading an article I was talking about this morning on our Metal Monday podcast with Nick, and we were talking about, I was explaining to him, like, everybody looks at the Lehman Brothers moment. And I was reading this, I think, in Bloomberg, the Lehman Brothers moment when the market really kind of was hitting the skids, right? Yeah. 2008, which actually was in 2009 when that happened. But the duration before it took to get to that point, I mean, you were in like a real downturn recession for 8 months before Lehman Brothers hit, and it was like, okay, now we're real in big trouble, right?
Yeah.
So a recession always takes a lot longer to be fully realized, I think, than people even actually remember, right?
Yeah, and I guess that's one thing that when I was looking at charts. Let me see if I can pull this one up. This is the Bushling chart. So 2008, price was parabolical, right?
Yeah.
And then it came back down. I guarantee if I was on this ride, I would have said, "Oh, it's not going to get below $300, right?" Because that's kind of where resistance was. And then when it went down to 250, I would have said, "Oh, this is definitely the bottom," because look, it just bought. That was where we started out at, basically.
Yeah.
And it actually went below that. And so now here in 2022, we see this rip. It goes below. We think, oh gosh, it's not gonna go any lower than where it started. Nope, it keeps going. And so, okay, where is it going to stop? You look at the left and you think, okay, there's a lot of resistance around this $400 mark. I don't know. I mean, if 2008 repeats itself, we're going to go a lot lower than what we're going to overcorrect. Just like we overcorrect on the upside, we're going to overcorrect on the downside.
And I feel like there's enough liquidity in the market. That 08-09 drop, there was not nearly the liquidity across the board that there is today. And I am by, do not take my advice as an investment. I need that like little disclaimer in the bottom, like whatever the fuck I say, don't do. I'm not here to give investment advice. But I would like to believe that we're not going to see that 09 low. Now, does it happen? I mean, I hope not. But I mean, to say that it's not possible, like the chart goes to show you, right?
Yeah,
it is a possibility.
Yeah. Well, and I mean, so if you're looking at the technical analysis on heavy, this is Turkey's heavy melt, right? So it goes down, and so you look at this and you'd say, okay, it bottomed once, it's now bottomed twice. Okay, that's a good sign of bottom formation. But here's the caveat: if it drops below that again, watch out, it's going to drop. And so now if it doesn't come close to that and keeps going up, so you could argue that this is a bullish technical sign, but the caveat is if it drops below the recent lows, watch out.
And this chart more pertains to our markets over here in the West, just because of the export side, right? So, coming into, like, say 2 weeks ago, it was, everybody's looking at a pretty big drop in October, right?
Yeah.
Well, we got a little relief towards the end of the month, on the pricing, on the export pricing side, which might have turned, say, a down 30-40 month into a 10-15 month, right? I mean, it was looking pretty dire there not that long ago.
Yeah, and I've heard that a couple times where people are like, hey, the export market's up 20. Well, we got to remember at the beginning of September, the number was 398.
Yeah.
It went all the way down to 350. Okay, so we lost $48. Now we're back up in that 368. So yeah, we're up $20 from the bottom, but it's all relative.
Yeah. It's all in the eye of the beholder. No, we're up. Like we're up. Like, well, I mean, how it depends on how far you want to stretch the chart out, right? You want to stretch the chart out,
Yeah.
Is
Now
it
we
a
didn't.
week chart? Is it a month chart? Is it 6-month chart? Are we up or are we down? I mean, let's say there's death, lies, and statistics or something like that, right? Like you can twist it how you want.
Yeah, and so yes, we are, and you could argue that hey, by the 9th of the month or whenever we traded September, it was late, right? That bottom was already in. So are we up $20 or $18 from the moment the trade happened? Yeah, but are we down? Are we still down month over month? Yeah, we are.
Yeah. So the moral of our podcast here today, everybody, is don't look a gift horse in the mouth. If you got a good sale, you might want to take it. Generally speaking, it's not the prettiest picture, but maybe that little bounce is what we needed to kind of keep us in the ball game. But we'll see.
Yeah. So that was your tip of the month. My tip of the month would be watch steel lead times.
Yeah.
And I feel like as much as we want to say, man, we're down. I mean, 6, 7. How many months we're going to say this in a row, right? How many groundhog days we're going to have in a row? I would say until that week, like Argus does a great job. They have a lead times. It's just hovering around that 2 weeks. And so until that comes back, I would not. We probably won't know when that number jumps, right? We can all realize that. And I don't know if we'll be able to react fast enough, but one stat I did hear was if the hot roll chart, it's kind of been moving in tango with lumber all year long. And so if that continues to happen, we'll see $600 hot roll.
Do you have the lumber chart? You said we are talking.
No. I mean, it's the same. It's basically the same as the hot roll chart. It's just straight ugly. Yeah. And so that's one thing that, we keep arguing about new lows, and we've had inflation and conversion costs and all those things. But I think one thing I was told this really early in the scrap in my experience in the scrap industry, and I believe it's still very true to this day, is we will always overreact. And so I definitely
both
think,
ways, to the upside and to the downside.
Yeah.
And that knife cuts both ways always, right?
Yeah.
Go ahead.
But I think you'll see that in lead time. So whenever we if we continue to react on hot roll and it continues to go down, at some point they'll probably take too much, and then you'll see lead times go from 2 to 3 to 4, and then 4 to 6, and then it's going to be off to the races. But until we get to that moment, until we hit the
gutter. Until we hit the gutter, we got to.
I think the bear is going to keep bleeding until that moment happens.
Well, I have my day in the sun for a while. I feel like I'm going to get my day in the sun again if we do this podcast long enough.
I don't know. I feel like we should just end it here. I mean, I'm bear 7 months in a row. This is great.
I'm not going to let you get away with that. It's not that fucking easy with me. Like, you gotta. Anybody can beat me in intelligence. Anybody can beat me in athletic ability. Anybody can beat me in a lot of stuff. But you just got to show up more days than I do and keep going. So I'm at least gonna make you. You're much smarter than me, so I'm at least gonna make you work harder than me too.
Oh, that's definitely not true. Well, what a great month, great topics. A lot of the other charts are just sideways. Just feels like mindset is the name of the game this month, and it just feels a lot darker out there than it did even 30 to 60 days
and I
ago.
think if this is the way that October is going to go, you can probably bet your ass that November, December looks pretty similar. And that's why I said, I mean, if you're cash poor or you want to put some money in the bank, I mean, I don't feel like if you've got a decent sale this month, it might make sense to get yourself in a better position to weather a long winter.
So, and you're saying that for the people I don't know, I mean, November, December are typically mute points in your opinion?
Well, I feel like, usually November, December can be decent trading months on the ferrous side, but that's, to me, only if there's a reason behind it. The way things are going right now, I mean, there's 10 reasons for it to not be a good November, December, right? I feel like traditionally going into winter, there usually some opportunity. Maybe not as much, this year, but I hope I hope I'm wrong. But like I said, operators operate. We'll see. You got to run your business, get there, and get shit done.
I love it. Well,
all right, my man. Well, I appreciate it as always. You always bring up some good points, and we'll be back next month, and hopefully the bull will be able to shake something loose.
Talk soon.
All right, man.
See you.